Prepare to go deep into the realm of Tesla stock forecasts with industry analysts and specialists contributing. Sandy Munro, a seasoned automotive expert, says the forecast appears optimistic for Tesla's potential for future growth. A little-known aspect of Tesla's amazing takeover strategy has the potential to propel the company's stock to $1,000 per share by 2026, a forecast that many investors are excitedly following. However, is this a feasible objective for the electric car market? Giant, please sit back and relax as we examine the numbers and potential influences on Tesla's development trajectory in this video. Together, we'll see if Tesla's stock price projection of $1,000 is accurate dollars per share by 2026 is achievable. But before we get started, make sure to hit the like button on Wall Street Games. And let's get started, according to Sandy Munro. By looking at the Tesla stock price prediction chart for 2026, we can see that 2022 has already passed with the stock trading in the low 200s to higher 100s. This suggests that Tesla stock has the potential to reach a value of $1,000 per share in 3 years. The forecast seems promising, especially since my prediction for the end of 2023 is $1,400 per share. If Tesla stock reaches $1,000 per share by 2026, it would be like Christmas arriving early. About $4.07 was the EPS, and the overall net income over 1.3 million vehicles were delivered between 2023 and 2026, generating significant revenue. We expect even more growth in 2023 alone, with 1.858 million vehicles expected. To learn how we arrived at this figure, watch our video from the first quarter of 2023, where we break down the deliveries and production for the year. Assuming a 40% annual growth rate, we anticipate nearly 5.1 million vehicle deliveries by 2026, with an average selling price of $50,000 in 2023, $51,000 in 2024, thanks to the Cybertruck, and back to $50,000 in 2025. A compact car that could be produced on a larger scale and sold for about $49,000 per vehicle is possible in 2026. We also estimated the operating margin for each vehicle, estimating it to be 14.5% in 2023, although recent price cuts may lower it to 13 to 12%. And in the ensuing years, we anticipate a modest rise in the operating margin, which will reach 16 to 17 to 18 by 2026. Lastly, we took into account the earnings and credits from the vehicles, as well as the one-time cost for autonomous driving. It is anticipated that this charge will rise by $2,000 annually, beginning in 2024 and continuing through 2025 and 2026. While Sandy Munro's projection of $1,000 per share by 2026 may seem unrealistic, this price was $8,000 in 2020 and grew to $15,000 in 2022, so it is reasonable to expect a yearly increase continuing ahead. Although it's certainly not impossible, we can see how it's realistic to attain this objective by taking into account the numbers and other elements that may influence Tesla's growth. It's always vital to conduct your due research before making any investment decisions. To grasp the possibilities for Tesla's revenue growth requires us to examine the data. As of 2023, 279,000 customers had opted in for the one-time fee for self-driving FSD at a rate of $2,000 per share increase. This translates to a 15 opt-in rate for FSD. However, we lack information on the number of customers paying the $200 monthly subscription fee, so we'll estimate 15 opt-in rate conservatively. We can figure out the total revenue from car sales and FSD, which will rise by 2% annually. By 2026, Tesla's energy profit is expected to reach $12.15 billion, with an annual growth rate almost 450%. When currency charges are taken into account, net income for each year is about $1.5 billion, for a total revenue exceeding $100 billion. Earnings per share, EPS, is projected to be 4.92 cents in 2023 and will rise annually through 2026. Though some may view this as unduly optimistic, there is cause for optimism going ahead to 2024 with an operating margin of 16% and an EPS of 7.84 cents. After breaking down the fundamentals, it's time to calculate the price per earnings P ratio to determine the stock price. It's important to note that as of the end of 2023, Tesla's outstanding shares are being diluted by 2% annually, which is reason number one for believing in this projection. Additionally, Tesla can continue to benefit from the economy. A PE of 60 is probably appropriate, resulting in a share price of $295 and a valuation of around $1 trillion. If 2024 proves to be a prosperous year, we might witness even more growth. Although there are good reasons to be enthusiastic about the future, it's crucial to have a realistic outlook and take into account all the variables. Tesla has a huge potential for revenue growth. Although there are good reasons to be enthusiastic about the future, it's crucial to have a realistic outlook and take into account all the variables. Tesla has a huge potential for revenue growth. However, it's necessary to take into account aspects like operating margin, outstanding shares, and inflation. It should be noted that Tesla would have about $300 billion in total revenue and a net income of over $57 billion if its PE ratio was 60. They admit that this sounds absurd and crazy, but they also point out that if Tesla keeps growing at a pace of 30% or more, it would be feasible. They also indicate that Tesla would need to find other sources of revenue, like energy, in order to keep growing at this rate. Believe that Tesla could increase their vehicle deliveries to make the PE more realistic. They suggest that this may be what Sandy Munro is calculating when he predicts $1,000 per share in the future. We note that something must be going on with Tesla if they're growing at a rate of 40, 50, or 60% overall. We remain optimistic about Tesla's future stock prices, despite acknowledging the challenges that lay ahead. Let's crunch some numbers together and take a look at Tesla's growth over the years. In 2020, Tesla delivered about 500,000 vehicles, and Elon Musk stated that they plan to continue growing at a 50 rate. If we calculate based on this rate in 2021, they should have delivered around 750,000 vehicles. However, they delivered almost 1 million vehicles, which was 936,000 in total, adding another 50 growth rate. On top of this, for 2022, they should have delivered over 1.1 million vehicles, but they delivered 1.3 million vehicles. Looking ahead to 2023, if we continue with a 50 growth rate, they should deliver just below 1.7 million vehicles. But we predict that they'll do over 1.8 million. Tesla wants to produce 1.8 million cars by 2023, so this year will be difficult for them. We'll have to wait and see how they do, though, since with another 50% growth rate in 2024, they should deliver slightly more than 2.6 million cars. Looking even further ahead to 2025, if we continue with a 50 growth rate, they should produce approximately 3.8 million vehicles. But we think that they'll do roughly 100,000 more than this. However, this gap is decreasing. If we use a 50 growth rate to 2026, they will provide 3.6 million vehicles, or about 5.7 million vehicles. In order to reach the target stock price of $1,000 per share by 2026, a 54 PE ratio is required. Given Tesla's anticipated growth, a 50 to 60 PE ratio is easy to obtain. And if FSD full self-driving becomes regulated and widely available by then, a 56 PE ratio would be considered cheap for Tesla. Let's change these numbers to the stock price in 2023 with a 3,789 million vehicles delivered. The stock price would be $718 per share with a 60 PE ratio in 2024 with 5,683 million vehicles delivered. Although it's unclear what will happen in the short term, if Tesla makes between $50 and $60 billion by 2026, there's a chance of a buyback that will lower the number of shares outstanding and raise the stock price. Currently, Tesla is diluting its shares outstanding by 2% annually, which could have an impact on the stock price in the long run. Long-term prospects for Tesla are strong because no company compares to it in terms of FSD energy and total renewable energy, making it a smart investment. The speaker is all in on the stock and has faith in Tesla's prospects, while Munro is a well-known figure in the auto sector and is an authority on automobiles. The speaker admits that the market valuation of Tesla's stock does not match its true value, but that over time, fundamentals will catch up to the stock. But it's hard to say when the market will realize the discrepancy. For this reason, investing for the long term is crucial, and it's crucial to avoid getting too sucked into the market's short-term swings. We appreciate your time, and we'll see you in the next video. This concludes our video for today. Don't forget to subscribe to the channel for future updates.